Hey, good Friday, everybody. Welcome to our Trading a Smaller Account class. I'm Connie Hill. I'm sitting in for Barb while she's going through what she calls her Barb Project 2.0, getting her knee replaced. And rumor is that she is doing well and up and hobbling around with the aid of a walker. So we're glad that her surgery went well, and we'll wish her a speedy recovery. In the meantime, I'm going to spend some time with you here in her absence. Now, sometimes in our classes, we might focus on particular strategies. But I want you to know, even if you're trading a smaller account, you don't have to stick with just one strategy. You can look at various strategies, and we're going to do that today as we look at some potential opportunities. Now, I hope you're following us as coaches on X. I'm Connie Hill, CS. We have the pleasure of having Scott Thompson with us in the chat. Scott's going to back me up if there's some questions I can't quite get to. He will handle those, but he does a little bit of hosting himself out on his X account. He's Scott Thompson CS. So give us a follow. It's free. It's easy to do. We send little nuggets that we notice out in the trading day, so you can be apprised of that. All right, let's go through the disclosures and lay out what we're going to talk about today. Options carry a high level of risk and are not suitable for all investors. We will be using the Paper Money software application here today for educational and informational purposes. I think it's a great tool to practice strategies and just kind of get comfortable with the Thinkorswim platform for those of you that are new to it. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. Now, this weekend, we've got an event going on in Santa Clara that's happening today. In fact, they're probably kicking things off right now. And their workshop today will be technical analysis, tomorrow option strategies, but you can hit another event that maybe is closer to your house, okay? Chicago, Washington, D.C., or a one-day event will be in Dallas on September 20th. So we'd love to see you there. They're free. We treat you like gold at these events, okay? People make new friends. They see others that are trying to do the same things they're doing, and it helps give them a sense of trading community. And so if that's something you're looking for, hit those up, especially for the education that you get out of it. All right? Want to encourage you to do so. Now, typically what we'll do, we'll take a look at the markets, see what's going on. Hopefully you already have a decent gauge of what's going on because you're watching the markets every single day. We're going to follow up on a couple of trades from the previously, and then we'll also want to put on some new trades for our class here today. Now, we have some special rules in this class. Special rules mean that we're focusing on the idea that maybe you're not working with a big pot of money. Maybe you're working with a small amount of money, whether that's your entire account or a portion of your account, that you want to be a trader, right? Where you're focusing on opportunities that are maybe shorter to intermediate time frame. And in our account that we work with, we go with the assumption that we have $20,000. The maximum position size that we can put on any position, we'll only spend $5,000 on. And we don't want to risk more than $400 to $500. Okay, so we're trying to keep that really small. There may be times when we get hit, right? The market does something we don't expect it to do, or stocks do. Maybe we hit 3 or 4 losses in a row. We don't want it to wipe out our account. So that's why it's so important to keep tabs on how much you're willing to risk in a trade. We're going to go both bullish and bearishly. Market's been more bullish more recently, so we've been focusing more so on those types of opportunities. When we're bullish, we could examine and look at any of these strategies, and today we're actually going to visit 4 of those strategies in one way or another. And that's why I said there's a variety of ways to address a market that we're in. When market conditions are bearish, we're going to trade that way as well. In fact, if you started out trading stocks and you didn't know what to do when the market was bearish, man, this is what it is really helpful for you to learn those bearish strategies. Now, there haven't been a lot of opportunities for us to focus on it too much this year, okay? But when we do focus on it, we might look at long puts, long put verticals, short call verticals. And when we're in more neutral markets, or when a stock might be appropriate for it, we'll introduce you to the idea of doing a calendar or an iron condor, which is just simply the combination of a short put vertical and a short call vertical, because we think maybe a stock's staying in a designated range. Okay, those are the rules that we're going to work with here. So let's hop on over to Thinkorswim. Let's just see what's going on in the markets. Now, I know it was down earlier. Okay. In fact, all the indices, as I kind of peek over at my other computer monitor, it looks like we're still down on all the indices, but looks like markets might be a little bit off of their bottoms here today. All right, so we can see the SPX. What's it been doing? This blue line is a 10-period moving average, and it's been staying fairly nicely above it, sometimes using it as a support area and bouncing up off of it. This red line is a 30-period moving average. When the market was weaker, it was trading below both of those moving averages. When it's stronger, it has a tendency to trade above those moving averages. So you might sometimes see something that's taken off and you're like, oh, I wish it would come back to the 30-day moving average, but it doesn't always do that, does it? So we have to identify those opportunities when we're looking at individual stocks and potential entry points, even if it might be up a little bit high and the intent is to go higher. Okay, so definitely bullish on the SPX. Let's look at our NASDAQ here, our NDX. And it's looking very similar. Guess what? 2 days ago, it put in another all-time high. SPX did yesterday. I didn't mention that when we were on the chart. But similar type thing, it's just kind of using this 10-day moving average. Doesn't get much below it when it has some bullish fuel going on. Now, the last, I'd say maybe 6 days here are becoming a little bit sideways. But we'll wait and see. The pullback has not been that great, right? We have a couple days pulling back and they're just kind of down a little bit and sideways. Same thing here. Maybe sideways a little bit and down a little bit. Okay. So we're not seeing tremendous swings in terms of the range. We're not seeing tremendous swings in terms of, the market whipping around per se. We're just kind of seeing steady, gradual grunting things out. Now, if we go ahead and look at the VIX, because we always want to take an opportunity to do that, we want to know, is volatility higher? Is volatility lower? Because that can give us an expectation. Are stocks moving really big right now because the market is making big moves, or is it selling off? And when the volatility index is lower, we tend to see bullish market conditions, like what we're seeing now. And so on the VIX, it looks like today's reading is at 1653. So it's in a lower range. When it pops, up here in the 20 and 25, then we're starting to see more volatility. And certainly if it were to, drive towards the 30 or higher, then we'd be saying, yeah, there's a lot of volatility in the market. But right now it's relatively calm. Okay. Let's go ahead and we're just going to do a quick update. Now, I told you on Monday in this class, I told you that we would be looking at the account that Barb has been using for some of your trades. Well, as I went in and looked at that this week, I realized I didn't have a lot of context for what the trades were intended to do and what she had intended to do with certain trades. And so I decided that probably that would not be the best use of our time. So we're going to focus on the ones that we've already started in our class account here and focus on those. If you are following up with some of those previous trades that you've done with Barb and you have questions, feel free to ask us. Okay, feel free to ask about a concept or whatever. I'm happy to address that. If you have questions that maybe don't relate us specifically to our class here today, but you have a question, go ahead and use the comment section in YouTube. Go ahead and put that question in, because we go back and review those throughout the week so you can get your questions answered as well. Okay, and so if there's something that kind of fits in that realm, feel free to ask me about it and I will go take a look. All right, so right now we're seeing, okay, maybe the market's slowing down a little bit, but certainly still bullish, right? Putting in new index highs every single week. It just gets a little bit higher and a little bit higher. All right, now next up, let's take a look at just a couple trades that we have going on. And I'm going to kind of clean this up a little bit. We have 4 trades. 3 of these we put in on Monday. TME, Roblox, and Dash were all trades we put in Monday. And quite honestly, they haven't done a whole lot yet. Okay, we have these are, let's see, we have a long call vertical there. It's down a little bit. On Roblox, this one has a little bit shorter time frame. We've only got 14 days on it, so we need to make sure to stay on top of it. We've got a long call vertical going on. You can see we're down a little bit. We'll go look at the charts here in a moment. And Dash, same thing, we're down a little bit. Are they down to the point that we need to be super concerned? Probably not. We probably just need to give them time to work. Now, one of the trades we put in here was a stock trade, actually, on CRSP. I went back and looked at my notes, and I saw we had some targets out there. We had some stops out there, and the target is gone. But we need to adjust it and put some things out there. So I do want to take a look at that before we get into our new trades and decide what we need to do with it, okay? It's good to note here it's down a little bit here today, up 14.43% on a stock trade, which is nice to see. And this stock has been a big mover, okay? Let's take a look at it first. Let's go to the charts. There's our CRISPR. And this is one that had been in an interesting price pattern. Those of you that like to follow price patterns, and I do, and so I'll point some of these things out to you as we see them. Let's get a different thing here. Trying to get a marker. Let's see, maybe this is the marker. Looks like maybe it created kind of like a cup and handle formation. Sometimes those will occur over longer periods of time as opposed to, say, 2 or 3 weeks. Sometimes they're a little bit broader of a formation. And we can see, peak was up here about, I'm just going to say ballpark 55, pulls back, and it has a nice consolidation down here. Technically, that is a healthy thing for a stock to do when it has this consolidation pattern. Sometimes as a trader, it drives you crazy because you're like, I want the stock to just be moving. And here it is consolidating, but again, a healthy thing. And then the expectation is that it would get back up here to the top of the cup. All right, so it looks like maybe it went a little bit beyond that. Maybe right now it's forming that little bit of a handle on it. Okay, so interesting to see this trade. You might see that formation. You might also see in this formation that we've got some flagpoles and flags going on here. Let me go ahead and zoom in here a little bit. All right, looks like there's some questions out there Scott is helping me out with. So I appreciate you doing that for me, Scott. All right, this stock. We got in here a couple weeks ago. We got in on a breakout of a flag, right? It had run up, it was consolidating sideways, and we got in on this pop. And actually, towards the end of the day, it pulled back a little bit. It did not march all the way to the target. We thought maybe it could based on the height of the flagpole. And what did it do? Kind of formed another little 2-day flag and pop again. So this morning I drew in a new flagpole. And what do we see in here? We're seeing a flag consolidation, right? And when we see stocks exhibit patterns like a flag, sometimes they get in a pattern, they do it over and over again, right? They run up, consolidate, run up, consolidate. So it's kind of what we're seeing here. When we're looking and kind of tracking with this, what we want to do is we don't want to see the stock cross down more than 3/4 of the way down the flagpole. If it does that, then we would call it more of a retracement. So right here where the stock is, it's not more than that back down the flagpole. So if somebody were not even trading this right now, they might look for a breakout to get into a fresh trade. Now for us, we might have an expectation that maybe this thing has a little bit more juice in it, right? If it's been running up. One thing I like to do, and we're going to do this here, I'm going to put in the ticker symbol of CRISPR, and I want us to see what it's done in the last month. This 1 month percent change should load pretty quick. It's just one ticker symbol. Shouldn't be that difficult for it. In any case, so we can see, is it moving slowly? Is it just kind of twittering around? So we're up about 14% here. That actually has gone past our initial target. All right. Our stop. Do you feel comfortable with our stop down here? Maybe not. Maybe it was good here when we got in here initially. But if we're at a point we want to maybe start locking in some gains, we ought to move that up. So this is what we're going to do. We like our observation of the stock here consolidating in, and we might get another day of consolidation. As long as it doesn't come clear down here, we're okay with it. But let's move this stop up at least to a point that we're like, okay, we're past our break-even point, and maybe now we're at a point of locking in some unrealized gains. So we're just going to move this up. And quite honestly, if the stock drops below there, then it's probably falling out of the flag pattern. That consolidation isn't working out. It'll be out here, probably 3/4 of the way down the flagpole. Okay, so something in that area, you might judge it to be a little bit different, but let's go ahead and move that stop loss up. All right. Next up, we're just going to take a quick look at Dash, Roblox, and TME because they're in a phase of let's let them work. Okay, they haven't been on that long. They only got on Monday. Traded a breakout here. Lots of times stocks will come back and retrace back to that breakout area, which is kind of a nice thing to see as a trader. It's like, okay, is it going to honor that support? And so we'll see if it bounces up there. We expect it to. Okay, if it comes a little bit down lower than the line, we don't freak out because this is an area, right? So we're going to let it work. Give it that opportunity. Roblox. Let's zoom in here a little bit. This is a long call vertical. We need the stock to move a little bit more. We need it to come past this 108 area. Looks like it did maybe a little bit earlier this morning, but we've got we've got a couple of weeks here. This is the one we don't have as much time on, so we're going to have to watch it. If it moves past that 105 or 108 area, we're going to be watching that next week because we're going to get into that window when a lot of traders like to take profits on trades and exit them rather than staying in all the way to options expiration. 10 to 5 days out is when traders are really kind of focusing on those. So that's what we're going to do. We're going to have to watch it fairly tight next week. See if we can, maybe we don't get a max gain out of it. Maybe we get a partial gain out of it. Maybe we have to adjust our order that we have out there to lock in the gains. We might have to do that. And then the last one, let's see, I think it was Dash. So let's just pull up Dash here real quick. On Dash, similar thing, we need to let it work. This one was moving pretty decent. And so we got in here on this day. It continued to run, and since then, it's just kind of fizzled a little bit. Kind of like what we're seeing in the overall markets. It's not like it's bad. It's not like it's downward trending. It's just not moving a great deal. Okay, so we're going to let it work. We've got till August 15th. So we're just going to let the trade work. Okay. Any questions on any of those trades? Chat them in right now. All right. I'll go back, see if anybody has anything, but let's take a look at maybe some additional opportunities. Now, one of the things I highlighted at the beginning of our session was we might employ a lot of different strategies. We don't have to use just one strategy. I mean, I teach a short verticals class, so all we do is short verticals in that class, right? We get really comfortable with that strategy and how to use it. In here, as a trader, you want to be able to have, a few strategies that you can work with. Today, we're going to start out from aggressive to less aggressive to more conservative. Okay, so our first chart that we are going to take a look at here, we are going to start with BP, British Petroleum. Now, on this stock, it's an ADR, so it's a foreign stock, which foreign stocks always have a little bit more risk, don't they? This is an oil and energy stock, and I was like, well, what's crude oil doing today? And as I looked at the crude oil futures contract, we don't trade that, but many times stocks that are highly correlated to what crude oil is doing, sometimes you'll see a similar pattern with them. So it looks like maybe crude is busted above this, or it's hanging in this old resistance area. Maybe it's broken through. We'll see. Looks like maybe it's got some room to move before hitting maybe the peaks that it had here earlier in the last month, or clear back here to 82. Okay, so it's just nice to take a look at that. Now, as we pull up BP, what do we see as far as an entry signal goes? We're seeing a breakout, right? We are seeing a breakout above resistance is pretty healthy. We also see an ascending triangle, which is a continuation pattern. When we see continuation patterns, that is an indicator that it's likely to continue in whatever the trend was. And this one, is a bullish trend. That's what these lows get a little bit higher, a little bit higher, a little bit higher. We love to see that. The highs are fairly equal up there around 31.65 and pop today. It pops through. That's usually an entry unless it goes too far. A lot of times people like to get in on that entry. Do you have to? No. If if it went really far and you were concerned you were chasing it, then you might wait for it to come back and retrace, bounce off this area. But right now, it's only up 3%. So we're going to go ahead and use this as an example trade. The other thing I want to point out to you is this RSI. Okay, RSI gives us a sense of the momentum, and if it's more bullish momentum or bearish momentum, and is it getting stronger? Is it getting weaker? And so we're seeing here over the last little bit, looks like maybe ever so slightly the low points here are getting a little bit higher and a little bit higher. So that would be bullish for the stock. All right, it's a $32 stock, so it's not that expensive. That means option prices might be a little bit more reasonable. Now, one of the things I thought that we might be able to do here is I want you to take note. We've got an old resistance area up here about 38.84. And let's kind of drill in here. If I were to copy the height of our flagpole here, actually, I'm going to redraw this. I'm going to start it from here. The triangle actually starts back here, but I like to go to the second line that gets hit because that's when we're like, okay, we've got a triangle forming here. And we're going to take the distance from where it is down here down to that bottom support area. We're going to take the height of that because that's the expected move that we are thinking the stock could do for us. Now, is it guaranteed? Never. Nothing's ever guaranteed, right? But let's activate that. Oh, no, I needed to duplicate it first. Duplicate it, then grab it. And we're going to just set it here right at the breakout zone. So somebody might say, okay, my first target that we might shoot for is up here about 34, a little bit of change, 34.12. And then we might allow ourselves, if it easily makes it up the target of that, height of the triangle, maybe we hang on a little bit longer, see if it can get up to that 34.84 area. So we want to buy a little bit of time here. Give it an opportunity to go beyond that first target. All right. As we set up the trade here, we're going to go out in time a little bit. We're going to come out here to a September option. Now, if this trade were to execute for us, in 3 days, sweet. We're going to be happy campers, okay? But we don't want to cut too short of time. We want to see, okay, how long is it going to take to make that move? And it might take a week or two, and then buy some extra time so that theta decay doesn't wear on our options so much, okay? So that's why we're going out to September. Now, open interest, man, it's lovely out here. Look at these thousands of contracts on the put side and the call side. We are going to do a long call. We are going to buy a long call. We're not going to put it in a spread. Some of you might have rules that say right now you're only doing spreads while you're trying to build up your account. That's entirely reasonable. You might approach it that way. Because it's a smaller price stock and we can't afford it in this account, we're going to go ahead with it, okay? Our maximum risk in this class is $500, right? We target for $400 to $500. So we're going to do 3 contracts here, okay? I think that works. We take 166 times 3. Wow, 498. We are just a nose below that, okay? If everything in the world went wrong and we lost this, maybe BP crashes a ship or I don't know, who knows what, then, and things went bad on it, we want to make sure we haven't put in more than we should, right? So we're going to go with 3 contracts here. And we're going to put in targets based on the price of the stock. You can put targets in based on the price of the option or based on the price of the stock. So let's come out here. Let me write these numbers down. Let's suppose that we are 34.84. We're gonna shoot for that longer target. Let's go put it in our trade. And where should our stop go? Our stop, it broke out here. We expect it to stay above this area. We expect that to start acting as support for the stock. So what we're going to do for the stop initially is we're going to go just 10 cents below yesterday's low. But we'll see what things look like at the end of the day, and maybe we adjust it and maybe just move it slightly below, say, this support area. And if this thing runs up a little bit, then we're going to inch up our stop loss. We're going to try to get to a point where we can say, all right, we're at a break even, and now we're going to lock in some profits. Now, in an ideal world, we could be out walking the dog and it'll go hit our target for us, right? We'll let automation help us out. The low yesterday was 31.01. And so I was looking at this having put in our stop at $30.91. So 10 cents lower than yesterday's low. Okay, that's how we're going to do it. Let's do a first trigger sequential. Let's create an opposite order, and then we'll put two conditions that we might get out on. We're going to have to change this to a market order because it's going to be based on the price of the stock. We don't know what the price of the option would be at that point. And let's kind of move this little box up. Okay, so the first one we're going to put in as a target. We're going to let it look for it to get greater than or equal to 34.84. Okay, if you want to go a little lower than that, you could, right? You could. And some of you might say, well, maybe I'll take the first target, or maybe one contract, get out at maybe the height of the triangle, and maybe hold on to the other two, let it go further. In our case right now, I'm just going to put all of them, okay, all contracts to do that. So if it gets to 34.84, we're going to be happy. If it gets less than or equal to our $30.91, that's going to be where our stop is. Okay, so whatever triggers first, that's the one we get out of. All right, I'm going to put them both in here, and I'm just going to check the wording down here. Make sure I've got my arrows going the right way. So greater than to get to 34.84 or less than in that stop. Remember, we're going to be real active with that stop. This is just today's stop. All right, I'm going to send that in, confirm and send, and we'll move it to our trading a smaller account bucket. And like I said, this is the most aggressive of the strategies that we're going to look at today. All right. Let's see what else. Let's take a look at this chart. And on this one, MSTR, and I'm going to put its little ticker symbol in here because it's kind of helpful to know, has this thing been moving around a lot? What's it done in the last month? Now, it's kind of interesting here because it had what looked like was a breakout earlier today. It's fizzling a little bit. So some traders might not be as confident in that. Okay. You can be as confident as you want to be, all right? Or not. Or you might go, oh man, it's getting back to that area. I'm not so sure that's a breakout. Or some traders might say, let me wait till the end of the day. If it's still there at the end of the day, then maybe you'll consider an entry there. One thing that looks good this early in the morning is it's got up to this average volume line. So it's like, okay, good movement there. Even though the market's a little bit down, we've got some stocks that are moving around. So this is MicroStrategy. Let's come over here. Let's go to the trade tab. Let's see if what I was looking at still makes sense or if it doesn't make sense. Hopefully it does. I was looking to be a little bit more aggressive here. This one is traded over 10,000 shares today, so we should be able to find some interest here, open interest in the weeklies. Now, as we look at the weeklies, look at this, how interesting. We've got thousands of contracts out at some of these deltas, or strike prices rather. This one's only 7, this was only 40, so it kind of might be a little bit hit and miss. Okay, what I was focusing on was maybe looking to do, and numbers have changed a little bit. It's pulled back fairly significantly from what I was looking at. I was looking to do a long call vertical on it, but I'm kind of changing my mind here a little bit. I might be more inclined to do a short put vertical. See if we can see if the stock will stay above 410, which is where? 410 is about here. This should be support. This should hold it. Not guaranteed to, but that would be our expectation. Let's go ahead and do a short put vertical here. We're going to do this one with 1,500 contracts. We're going to do the 410 and the 400. So we're going to spread it out by $10. There's that 405 has 47 contracts. I'd love to see more out there. That's why we're going to spread it out a little bit wider. If we had oodles of open interest out here, we might go with it. I should say I'm pointing at 395, but we're not. So that's why we're going to go here, sell the 410 and make this 400 on the downside. And I'm going to go ahead and lock in that credit. All right. On this 340 credit, is that a good enough credit that you like it, that you might want to move forward with it? It finally calculated here the 1 month, what it's done over the last month. We saw it up and then kind of roll down, move up again. It's up only about 10%, but that gives us an idea, that, if it's up 10% every month, that's 110% a year. That would be pretty cool, but not guaranteed. And it's, just the average, just what it's done in the last month. So let's run some numbers here. All right. Our max theoretical loss is going to be 10 minus 340. Okay, so 10 minus 3.40. And so 660. So we're going to take 340, divide it by 660. And right now on that strike price, it has about a 60% chance of expiring out of the money in the next 4 weeks. Okay, that's the expectation here. If we run the math on that, 3.4 divided by 6.6, that's going to give us about, well, look at that, a 51% return. Why is this so high? Why do you think it might be so high? Well, it could be so high because implied volatility is a little bit higher there. That means the premiums are going to be a little bit more expensive. And for us, selling an option might be a little bit more juicy. Now, it did move a little bit bigger than what I expected. So we're going to do something real quick. We're going to do a comparison. And we're going to see what this one is. And what if we went with the 400 that's a 28 delta, sold that and bought another strikeout here at the 390. All right, let's look at that. This one would have a higher probability of expiring out of the money. Oops, where's the 400? Let me make sure I'm on the right line. Here we go. 66% as opposed to 60. Would this give us a good enough credit that we'd be happy with it? I'm going to go ahead and lock that one in here too. Right, so 10 minus 275 equals 4.5. That makes sense? That actually doesn't make sense. Let's run those numbers again. I might have had something left over in the calculator. 10 minus 2.75, we should have a quarter there. All right, that should be 275 divided by 725. Let's see what that percent return might be, and then we're going to pick. And I'm going to let you guys vote. Okay, sometimes I'm democratic in the class. I'll let you vote. So you can tell me. So let's see here. 2.75 divided by 7.75 gives us a return about 35%. Okay, so the one a little bit further out of the money would have a higher probability of expiring out of the money and would give us a 35% return. So this first one's 35%. And the one over here, I think it was 51%, if I'm remembering correctly. Which would you prefer, the first or the second? Okay, the first or the second? And I am spreading it out a little bit wider because I want to have the contracts that have more open interest. Okay, 1,300 contracts. There's a lot more contracts out there than, say, just the 150 or the 143. And we love liquidity, and it's a higher price stock as well. Okay, so you let me more. Interesting point, Marcelo. Marcelo says the second one we risk less. That's true. Ricebird likes 51. Mr. P likes the 51%, which would be the first trade here. Jim likes the second. John likes the second. Cornelius votes the second. Toasted Station, I probably messed that up. The second, okay, the overwhelming response is for the more conservative one. That's the one we're going to do. Okay. But it's not a right or wrong. It's more a preference, right? Cornelius is voting for the second one, but there's nothing wrong with Riceburg liking the first one better, right? Both of them could qualify. Let's go ahead and get rid of the more aggressive one. We'll put in the more conservative one. Our risk on the trade here, now that actually might present a little bit of a problem for us. We don't want to risk more than $500 on the trade. That I didn't take that into consideration when I was kind of flipping the trade here. 775 is a little too much in our account. So what do we do with that? Let's make it fit our account. Okay. You might not like it as well. We're not going to do a huge number of contracts. We can be out here with 143 contracts if we're just doing a couple of contracts. Okay. If you're somebody that is 10 contracts or 20 contracts, then yeah, you might not feel comfortable out here. Okay. So I'm going to change it. Even though I had you vote, but we're going to still keep the 400 on this. We're going to make 395 because we've got to keep our risk in check. Okay. That being the case, max credit is $1.50. Max theoretical loss is $3.50. That fits our budget, doesn't it? So we're just going to do the one contract here. Let's go ahead and put in an order to buy it back if we get a chunk of it, right? A chunk meaning the majority of it. That we're happy with the majority, that we're not going to try to bleed every little last penny out of it. Some traders like to approach it that way. You don't have to. When we get a chunk of this, for this particular trade, let's go with $1.50. Let's go with 70%. If we've got 70% of it, only 30% is left. And so 30% is going to be about 45 cents. Let's just go buy it back at 45 cents. And if the system does it, we kind of put it in right here. We could be out walking the dog. You could be out having a great breakfast with your buddies or whatever. Then great. Let the automation take care of it for you, right? The Thinkorswim platform. Okay. Let's go ahead. We're going to hit confirm and send. We're going to put this in our trading a smaller account bucket. Now, I hope you guys have subscribed to the channel. If you want to go back, here's some previous classes. It's nice. It makes it convenient for you to find what you're looking for if you subscribe. Now, I like this feature in YouTube. I subscribe to a lot of different podcasts and channels in YouTube. And when you subscribe, then it just kind of takes you to that content, makes it a lot easier on it. And that's why we encourage you to subscribe. We have a new thing we've started here a little bit. We've got some bite-sized content, which are shorter time videos. We've got our most popular videos. If you're starting out with the Thinkorswim platform, you can start here. Cameron May's got some great videos that go with that. If you're in kind of say, I need to learn about my stocks, maybe I jumped too far ahead to options, let me learn stocks a little bit better first. We've got everything laid out for you, okay? And then you can always find the playlist so you can go back and play the previous classes. Maybe you just miss us on the weekends and you want to get a little learning in and you missed something this week. That's a great way to be able to go find it and do whatever class it was that you missed, okay? So I'm going to encourage you to do that. All right. Let's see if we can sneak in one last trade in our time remaining here together. This one I intended to do as a short put vertical, so we're probably going to stick with that. We're going to go with this one. We're going to go with WDC. Now, WDC, Western Digital Hardware Company, computer hardware, I should say. Look how nicely it's been bouncing here off the 10-day. Boom, da boom, da boom, da boom. What's it doing again right now? Kind of pulled back to a support area. Looks like maybe it's bouncing off that 10-day right now. Some traders might view it just being at support. And for a short put vertical, sometimes traders say, hey, if it gets down to support, sometimes some traders like to get in there without necessarily waiting for a big bounce to occur. So this one, we're going to get in on the idea that it's kind of maybe bouncing off the 10, or maybe it's just kind of sitting at a support area and kind of moving a little bit off of it. Okay. On our RSI, what is that telling us? Well, it's above this 80 area or 70 area. That means it's in an overbought condition, which means buyers are in control. So all along through here, the buyers are being in control. And I like that when it bounced off the 70 and it's headed back up here again. Okay, so that gives us an idea of the momentum and the trend with this one. Let's go look at how the contracts lay out here. Now on this, I'm going to go with the October 15 options. Those are the monthlies. That's where we have more open interest to take advantage of. And let's see if my strike prices that I was looking at still seem to work out. You know, you're looking for, when you're selling, you're looking for maybe a 30-something delta, high 20-something, low 40-something delta, something maybe in that range. This one's going to offer us a 41 and a 30. And we're going to go, let's see how this works out here. If we go, looking at the open interest here as well, let's go 62, 50, 60. All right, let's see if the numbers work. We've got the technical entry. We've got plenty of open interest. Now let's see if the numbers work. So on this one, let's go ahead, let's lock that in. A 67-cent gain would be our max theoretical gain. We're going to see what our max theoretical loss is. So we're going to take the difference between that and 2.5. So on this one, let's just kind of put some fresh space here. We're going to say 67 divided by 1.83. And I'm just going to kind of put an ML there. What's the probability? Well, it's starting out here about 64+%. We like to see it above 20 for a higher probability trade. So that's kind of the trade-off we're looking at here. Let's look at the return. So we've got 67 divided by 1.83. That gives us a value about 36%. So some traders might like that. If you're somebody that wants 40%, you might be a little more aggressive. If you're willing to settle for something lower than that, you might choose a strike that's a little bit more out of the money. We're going to go with this one here, though, with the 66%. Now, if we can say $1.83, we're going to be able to do 2 contracts here. All right, so we're going to set that at 2. We're going to do a first triggers a sequential. We're going to just put this order to go buy it back. If we get a chunk of that gain, we'll create the opposite order. And what is a chunk of 67? Right? You might have differing opinions, and I've asked you before, what is your magic number you like to get to? Some are 50%, some are like 60%, 70%. On this one, let's go ahead with the 70% again. So if we get 70%, let's get out when 30% is left. 0.67 times 0.3. That's going to say 20 cents. We're going to go buy it back. If it gets to 20 cents, we don't have to try to catch it. We're going to let the Thinkorswim platform do that for us. And we're going to make this good till canceled. And who knows, maybe, well, we'll see what happens. I don't know that things can move that greatly in a day. They certainly could, but most of these trades are going to be more trades of patience. And on the first one, giving a little bit of time. So we're going to put this in our smaller account grouping. And great, we got filled on it. Now, pause noticing something here about earnings, and let's talk about this. Here is earnings. It's about the 31st of July. That gives us, we could be in this trade about, 2.5 weeks, okay? It looks like we don't have a time on that one when earnings come out, if they're in the morning or after the market closes. But for us, we'll just make sure we're out. You might be somebody that feels comfortable holding over earnings, and you might be somebody that doesn't feel comfortable. So those of you that don't feel comfortable over earnings, that's all right. We still could make, it could still hit its profit target, and we could get out before the earnings comes along. All right. What would I want you to do kind of to follow up with the things we've talked about here today? Well, get comfortable with these strategies, right? We did a long call. I said not to do the long put or the long call vertical because of what we were seeing. So we did a long call, and then we did 2 short puts, okay? Where we're looking for the stock to just kind of stay in a range on those last 2. We don't need them to shoot to the moon. First one, we need it to move quite a bit. These two, they can just kind of sit, they can go sideways, they can even go down a little bit, and we can still be profitable on the trade. So we will follow up. If there's any big movements, we'll look at it on Monday, but we will get into some additional trades on that. And again, if you have questions on some of the things that maybe the trades that you've been doing with Barb, feel free to put them in the chat, in the comment section rather, of this YouTube video once it gets posted. All right. I didn't see a survey out there today, but you guys were great on the survey. Gave me some couple of things that you want to make sure that we do in this class. So I'm going to try to stick with those suggestions that you gave me. We are done with our time here, but at the top of the hour, advanced charting techniques. Cameron May is going to lead that discussion right at the top of the hour. He always has great material. So we would love to see you there. Otherwise, I will see you back here on Monday for our Trading a Smaller Account on Monday. Follow us, subscribe, and do your own practicing to get comfortable with the strategies. All right, we'll see you later. Bye-bye.